Welcome back to another video. As you can see, things are starting to turn up. And this is no accident. This is by design, the way the waves work. In my previous video, I told you this exact thing was going to happen. We're going to grind up. We're going to go higher, but it's going to be a grind. Why? Because we're not moving up impulsively, right? This is AriasWave, not Elliott wave. Elliott wave is complete shit, right? This move is calculated. I understand it, and it's forming a very nice B pattern that's expanding to the upside, right? As you can see, I've marked it out. And you're probably wondering, how can I possibly know that that's the count? Well, because I look at internals, right? The internal B wave would have started here with a sharp A. And yes, this is not a five wave move. There are certain ways you can tell. This is not a five wave move. This is not a five wave move, but they're all the same pattern. They're a zigzag that's getting sharper, less sharper, and then weaker. So that's all the A waves you're going to see within this B wave until we see the end of B wave, and then we see the start of D wave, right? So we'll continue to grind higher because of, like I said in previous video, the bearishness turning to bullishness, right? The symmetry, the chop continues. The confusion is there for short traders, people who are short. The confusion is kind of there. For now, it's going to get worse, right? So that there is good enough for me because I understand how these patterns evolve, right? You have a simple A wave. Now, if you follow my work, you'll know that an A wave is not a complete correction. And this is the whole reason why I expect the pattern to do what I said in the previous video, right? It will basically create, in a nutshell, right, zigzags that don't look like zigzags. They look like five wave moves because of the way that the correction expands, right? And that would be an internal B wave. Right? You got the A, the B, the C, the D, the E, something like that. Anyway, I'm not a fortune teller. I can't draw them exactly, but I understand the internals. So for this to break the high again, it's just a D wave, right? It's a D wave that the internal structure is expanding, right? And will eventually create the final move to complete the D wave, which will be mega expanded, right? And this is simply put just AriasWave. Now, I don't know how long it's going to take. I don't know when this is going to happen, right? I already gave you a rough estimate based on the length of, due to symmetry, the way down and the way up. That doesn't mean anything because we have a slope to the right, to the upside on the right on this head and shoulder. So this could be less than a month, right, from the low, right? 24th of Feb. Well, okay, so there's only like 5 days left to a month, and you know what? It can happen, right? Once these patterns evolve over the next few days, you just don't know how quickly they can evolve. I don't want to give it a time frame, but some symmetry is needed. Now, at this point, things might get interesting because we have this, like I said, this particular new head and shoulders pattern with the smaller shoulders, right? Now, once we break that again to confirm this level here, we don't know. Things might get a bit sharper as they move up, right? We don't know. But there's a good chance that could happen, especially if Bitcoin starts to do the same thing, because I believe it's doing the same thing. Just take a look at the pattern. It's chopping out, grinding higher as well. So the more that moves, the more this will move. So getting ready for bull means breaking certain levels. On Bitcoin, it's all-time high. On this, it's 0.1383, right? And this is predicted stuff, right? This is not a guess. If you're an Eliotician, you might look at this pattern and say, well, that's a leading diagonal. That's a leading diagonal, wave one. Except leading diagonals don't happen for the start of what? Maybe a wave three, because this pattern started back here. Now, wave one wasn't a leading diagonal, right? Those are very rare patterns. Oftentimes, what you are seeing is just this type of thing, right? This type of thing. People might think that they're seeing a leading diagonal, but it doesn't happen very often, right? Instead, we have wave one and two ends just far above, right? It's called an expanded correction. There's a type 1 and a type 2, right? A type 1 is an expanded correction that expands to the upside but ends down low. A type 2 is a correction that expands and ends higher. I believe this will be a type 2 correction because it'll just break the highs, right? And then it'll come back a little bit just from a rejection of the level. It'll come back a little bit, right? And then it'll continue higher, right? There's too much bullishness in this market for it to be trying to produce some weird ass pattern. And besides, why would it do that when you're in a wave three? Okay. Now that's the type of logic I use to disseminate these patterns. If you're in a wave three, why would it come back? It doesn't make any sense. The reason why Bitcoin's wave two of a wave three is expanding is because this is why I believe wave threes are longer and sharper, is because type two corrections happen in those type of moves, right? So complete faith I had the whole way through. We're moving back up. We will continue to move up, and unless anything changes, which I highly doubt at this point, then we are just basically getting ready to move higher. The first part will be grindy until we hit that 13-cent mark, but then it's just going to be off to the races, right? We're just going to explode to the upside. So I'm going to keep tracking this thing because I like to. That's what I do. I created AriasWave for a reason because I like to know what's happening, right? It allows me to make videos because it's so freaking interesting. But at the same time, it also makes me realize, shit, I'm in a good trade, right? Because I also understand the bigger pattern. So if you haven't seen the full breakdown, I'll link it down below. Thanks for watching.